Greetings, beloveds, with about 5 minutes to go before the end of the session, and this is for May 26th, 2023. We can see the markets here called up after yesterday's move higher in the NASDAQ. So we can see markets are called up higher here. And if we take a look at the cryptos, we can see that they are also showing slight gain for the day. You can see Ethereum here down up 1.77 and the BTC is up about 1.24. I have to say I'm so glad that we were never bearish, even here in late December of 2022. And so for those of us who've kind of held the opinion that the market would trend higher, we can see that that outlook has paid off. Let's take a look at the weekly performance for the week. The biggest mover we can see here is the NASDAQ, up about 2.5%. And we can see BTC is pretty much unchanged for the week, and the Dow was down slightly. As we go towards the close here, this is a 5-minute chart for the S&P 500. Couple of observations. We can see, looks like we might hold this RSI lows line into the close, and I don't see the market pulling back. Remember, we are going into a long holiday weekend, and if you are familiar with my observations over the years, whenever they want to push the market higher, they want to attract that sideline money. What they do is they move the market to new highs just as you go into a long weekend holiday. Looks like the same program is back in play. We can see here, taking a look at the black line, which by the way gave this movement here as of, I believe this is today actually. This move here in the S&P 500, so this move here corresponds with this move on the 5-minute chart, and this is RSI 26 on the 5-minute, which is what I use. And we can see that we've been holding support here during afternoon lows. So the two lines are holding. I would suspect we close around where we are trading, at least a positive close going into the end of the day, end of the week. If we take a look at the NASDAQ, first thing I'm going to say is for many weeks I was proposing the following line as resistance, or at least an area for the market to make a decision, and we can see it's taken us. So we did break here coming into 2022, turned into resistance here middle of 2022, and then for 2023 this is where the NASDAQ has been struggling. But as I pointed out the last couple of weeks, we managed to finally clear this area. So I would say we're in a different phase of this market. Now I want to draw your attention to the lows going back all the way right there. This is all the way to, I believe, February, if not early March of 2021. What we're going to do is we're going to draw a line from there and explain to you what I think this area could be holding some guidance. So let me give you that number for that area. So the weekly close, there's the market close by the way. So the weekly close here, let me take a look at the lows there, give you the precise number. It's 12920.15. Now I bring this up because you see that the market has used this on many occasions. So we see, for example, we got support on the line here again. We tested it here, we held, tested it here, we held. Here we went below it, but immediately recaptured the level. Now notice what happens is we broke below that level here, turned into resistance for 2 weeks before we get this pull down, or let's say this drop here. So this drop right here, and then notice it turns into resistance here. We get another drop period. What I'm saying is we need to watch this number, or we can watch this number for guidance. Above this number and the market is acting very well, and below, in other words, if we end up seeing resistance on this number, then short term this is where the market is going to stall, because it's where it's been reacting to going all the way back to early 2021. So if you're bullish, of course you'd want to see the market above this level and trending higher, and those who are bearish would want to see the market being rejected around here and the market to start turning down. Again, this is the number I would watch. Above it, bullish; below it, bearish. NASDAQ daily, something similar. Here, we need to go back to this close on a daily basis. Here there is a daily closing high right there. We broke out above it, but turned out that this was a trap zone, because ultimately we break below that level. So we can also extend this area as such. Notice we came back here and we were rejected here for a couple of days, but as we go into the long holiday weekend, we are breaking out above this level. So this daily closing high right there has a number, and that is 12,720.58. I would say as long as we are above this, this is looking like a market that has an appetite for higher prices. And of course we can monitor this area, because should we reverse and see ourselves below this area, I would say that now the market is primed for some type of a pullback. Short term also, day to day, we are closing with the RSI for the NASDAQ above 69.1. And as you know, as long as you're above 69.1, you tend to be in a trending, upward moving market. By the way, I should point out here, if you are watching this, take a look at this breakout here. Something you're going to see in this video a lot, which is we break out here above this RSI level. So we can say there was a wedge, something I call a swedge formation. So we break out here, this movement, and turned into support. So let me clear that level. So let me show you again. So if you are watching this during the week, this was good guidance that there was a bounce in store even after Wednesday's drop in the market, because we cleared this area. We came back and tested it midweek, and you can see the reaction. You can also see a different version of this. This is the Dow daily. We got this line connecting RSI lows right there. There's another line connecting the top side, previous resistance line, and you can see they both came in contact. So this intersection of the two lines is where we are finding support on this Friday reversal day. Remember, the Dow weekly still continues to trend with what is a huge wedge formation. This is the Dow 2-year weekly. We got this top side line, and this is where we stalled as far as the Dow is concerned. So this has been a challenge for the Dow. Resistance lately here in the last couple of weeks, and we got the bottom side line still forming. So we have a huge wedge, and ultimately either we get a breakout above this line here to take the market higher, or over time, and this is going to play out, we're going to observe this, so there's no need to jump into conclusions. Either we break below this and we see the market drop. So we are within the wedge. We have to be patient for this to resolve in the weeks ahead. Let's take a look at some stocks here. Remember, a stable to bullish market means some stocks are taking off. Some of you might not know that what I do for clients is find them breakout ideas during the week. And so let's take a look at some examples that have been doing great. For example, here ELF, which has been mentioned for clients a couple times here in the last couple weeks, if not months, going back to October of last year. Take a look at the chart here. We can see this stock was a breakout candidate for clients when it broke out above this level. Let's call it under just in the lower 40s. And we can see ever since then, it's really had a nice run here. This is the breakout entry. We had another breakout recently when it cleared this area here, sent out a couple of other breakout alerts around that time period. And we can see since then, the stock has gone on another run, and it has actually doubled here in 2023 already. Another stock that has done well is RMBS. Again, breakout alerts sent to clients. You can see again here in the middle of May, and we can see all the way to early March. Take a look at the charts, or the chart for this stock. You can see highlighted here in circle here is where I gave out the breakout alerts, and the stock continues to do well. So nice entries here, and again, all of these are based on my breakout criteria. Another stock that has done well for clients, SYM, couple of breakouts here, and this one has been a flying stock, one of the leadership stocks in the market. So let's take a look at the charts here. These are all the dates that I sent breakout alerts for this stock. As you can see here, this was the breakout I was targeting here. There was another breakout right there, and even this week another breakout right there. So lots of breakout alerts throughout this process. The stock has already more than doubled since March of this year. Of course, not all breakouts are going to work, but the ones that are going to work are going to meet the minimum requirements that I am looking for. Switch gears. Let's take a look at the financials. Take a look at the XLF. We can see, yes, it continues to form this sideways pattern here of wedging. So ultimately, we know what this entails is either we are going to break out or break down. So either we break down eventually, or we break up or out of this range. I would lean towards a market that would favor pointing high and moving out of this range. Day to day, we can see you got this support line, and you got the prior line coming from the lows here based on my uniformity concept. So if you're using this from a day-to-day perspective, you can see the financials as I've been talking for many months. In my opinion, the financials were not breaking down, and it was definitely not looking like 2008. That was my opinion from many months ago when everybody turned very bearish here. And I think what they were neglecting to account for was the big picture on the long-term big picture monthly chart. So until this changes, even the financials, yes, they've been down since March net, but they have not necessarily given a major sell signal. If they do give a major sell signal, obviously we are going to be able to catch that as it takes place. Now, one of the instruments that was looking very interesting this past week was REK, which is the pro shares short real estate sector. And this one, if you take a look at a long-term monthly chart, was actually looking very interesting. You can see here on a long-term monthly chart, the RSI seems to be wanting to break out. So it's of course it's of interest, and it's tempting to consider this as a breakout candidate. It's not quite there in my opinion, but it's something interesting, because if this instrument continues breaking out above this range in the RSI and in price, it might be something to consider as a way to play the real estate market from a short side. Now, the monthly might be looking good, but the daily, and I was watching this throughout the week, and we can see the daily had come back to test the topside line. So this is one of the reasons why I was not too excited about the breakout. I could see that possibility. Something else I was looking at midweek was the line from this break point right here. So again, based on my uniformity concept, we can see there's a break right there. Take that break, draw a horizontal line, and this could be where the next resistance comes in. And yep, uniform activity rejection means that this is a area where things stop. So this is showing signs of pulling back for now, but long term, it's something to watch, because if it eventually turns around and clears this area, for example, if it can clear this price level where it found resistance this past week, so resistance here, yes, for now, but in the coming days, weeks and months, if we end up eventually clearing this range, we need to respect the possibility that this could be leadership in terms of shorting the market. So it's something to consider for now. It is giving a sell signal similar to what I was observing during the week for the VIX. So this is the daily for the VIX, and I'll draw two lines. The lines, in my opinion, were very telling of what to anticipate here. There's this backtest line, not complicated at all, because we break down here, uniform activity rejection here, and when we closed, I believe was Wednesday, on the line, the suspicion was this is where we might see a reversal in the XLF. In other words, the market would recover. And we can also see that there's a line, if I draw the uniformity line as such. Again, not to confuse you, but this is something I talk about, the uniformity concept. Resistance was well telegraphed here. So XLF, in my opinion, continues to be sideways to down, which means the market is sideways to higher net. The EFA, which tracks the European markets, we can see, we take a look at this breakout. Yes, it's down over the last couple of weeks, but there's a way to look at this from a positive slant, which is the following. We break out here. We came back this week to test the breakout, and we held. So I would say, yes, it's down for the week, but not the worst looking chart ever. And we can also draw a line that shows something similar to what we see with the Dow. We got this topside line that has been a problem, and we are also building a line connecting recent weekly RSI lows. So I would say, can even do it as such. So there's this trend line here. So either we eventually coil above this line, break out above this range is what the bulls want to see, or with the resistance already being shown on the weekly RSI, if we break this line, then short term we have to anticipate a deeper correction. Again, here, as long as we are holding this breakout level here, I would say this is still a sideways to higher market as far as European markets are concerned. And we can take a look at the VT, the Vanguard Total World Stock ETF. And again, here, something similar to what we see with the Dow. We got top side line, resistance, bottom side, wedge. So either eventually, if we see a break below this line here on a weekly time frame, then we can turn bearish. But until that happens, this is still a market looking for guidance or direction. Eventually, if we clear this topside line, then we are going substantially higher. So it's wedging. We have to wait for that wedging process to resolve so it can give us direction and intention. Taking a look at the Nifty, remember we've been talking about this line here, something we're going to see with the cryptos also on their weekly chart. So this is the monthly, and as long as we are holding above this line, just as this line was guidance here when we break out right there, this is still a market that continues to be sideways to higher. Here's the BankNIFTY, and again, this is even more simpler to understand. There's this line here. We held this line coming into the last couple months ago when we came and held here about, let's call it now 3 months. So as long as we're above the blue line, we anticipate a market that is sideways to higher, and we can see here this is staging a breakout on the monthly. And as long as that breakout is holding, we have to give the market the benefit of the doubt. The level here to watch, as I've been saying, is I believe 43321, which is the prior monthly closing high right there from 2022. Anything above this price and the bank Nifty should be in a stable to higher situation. Now, as we are coming close to the end of the month, we start anticipating the possibility of a change if the market happens to respond to the RSI topside line as such. So there's a line here to pay attention to, because month to month, if we end up rolling over and this turns into resistance, then we might see a reversal based on the RSI rejection from the topside line. Gold weekly rolling over, and we shouldn't be surprised. I've been talking about this for many weeks throughout this process. I've been anticipating this pullback in gold, and I've been talking about it every week. And that's the weekly. Taking a look at the monthly here, we can see some of the reasons why I was not very confident here. Is there was this backtest line that I suspected was going to be an issue and continues to be an issue. If gold is going to move higher, it needs to clear this backtest failure line. And remember, the key why as to why I wasn't very excited about the possibility of a breakout here is it does not meet the minimum requirements for the RSI and MACD that I look for. So because it did not meet the minimum requirements, I've been talking about this for many weeks, if not months, that gold was staging another classic trap, in my opinion, just as it trapped people here in early 2022. This smelled, looked like, and apparently continues to behave like a trap. Now in the future, if it meets the minimum requirements, then we can go long gold, just as we did this gold breakout here in 2019. So this met the minimum requirements right here, and that is why at that time we had a substantial or decent move in the gold and gold related names. But this current breakout in 2023 was a no-go for me because it did not meet the minimum requirements. Similar to the Nifty chart we just saw, we can see here this is USO. Of course, it goes inverse the dollar. It goes inverse gold. And we can see, similar to my observations on the Nifty, if you understand this, some of these things can seem very simple, but they are powerful at the same time. They simplify things. Here is where we have this reaction in the dollar, and we are forming support based on my uniformity concept. As long as we are holding above this line with the double bottom, the net we have to conclude that for now the dollar continues to be sideways to higher as well. Over the last couple of weeks, I've been talking about this line for USO, which tracks crude oil. It's a simple line connecting the weekly RSI lows line, and as long as this line is holding, as I've been stating, you can see that this is going to stabilize. Now keep in mind, this is reading too much as far as crude oil is concerned, because net we are still stuck in this tight sideways downwards market. Is it bullish? No. Is it broken? No. For it to break again and really go down, it would need to break this simple RSI lows line on the weekly, and this is a 5-year weekly chart. Taking a look at the monthly chart for USO, we can see that it's really recovered towards the end of the month, which means that it is respecting this RSI 50 area. So in the new month, should we find ourselves back above 50, then that would mean that crude oil and the energy names are going to have a bounce move. And again, if you take a look at this monthly chart, really if we zoom in a little bit, we can see that there's a lot of gamesmanship here. All of these are wicks that led to nothing. So it's threatening to go down. All of these are wicks in this area, but the market is closing above this area by the end of the month. So yes, it's a very choppy market over the last couple of months. In fact, going back all the way to, let's call it here, it's been closing in this monthly range, going back all the way to about August of last year. Sideways, really no direction. XLE monthly, I've been proposing this line similar to the Nifty and the dollar charts. So it's a way I look at it from a long-term perspective, is figure out where it really began to move higher. So we can say, I'll even draw it right there. So we can say, from the way I've been looking at it, we break out here, and we're going to take that information and use it. So we're going to draw a line as such. Notice how we bounce on the line here, and we bounce on the line here again, and we are within that range. So month to month, if we can bounce on this line again, then it means that crude oil and energy space after a down month in May would have an opportunity to go higher. Now, of course, if we end up breaking this area to the downside, then we're going to see a deeper drop coming off the highs recently here in late 2022. So a break of this line, in other words, means there's going to be another push to the downside. Right now, I would lean towards support as well. Bitcoin. is confusing traders, I would suspect, because it is trading between a downward sloping 50-day moving average and an upward sloping 200-day moving average. So what does that mean? But I would suspect that eventually, or in the short term, we're going to see either a breakout above this recent topside wedge, and there is another wedge forming right here. So I think that can be guidance in the short term if you're a short-term trader in the crypto market. A break below this wedge, of course, means that we go down in the short term, and a breakout above the wedge means that in the short term we see cryptos reclaiming the level back above the 50-day moving average. If I take advantage of my uniformity concept, just figure out where we had this huge reversal here, huge reversal. This was not as it was not a joke. This reversal here, trap, and then a blast higher. This is where we see things changing right here, somewhere there. So we take that information, and based on the uniformity concept, you can see that we're already showing that we understand that this is an area to hold, which tells me in the short term, unless we break this line, that in the short term, cryptos are looking to be sideways to higher in the days and weeks ahead. Taking a look at the monthly, by the way, let me just mention the SMH 1 second. Semiconductors had a down month last month. Now, sometimes people don't want to see a down month or a down day or a down period. This down month was very necessary. Why? Because it sets the stage for some rest, and then you have an opportunity to break out. So down month is not the worst thing if you are bullish. Going back to BTC, we can see a down month here. The question becomes, are we setting the stage for a future short-term monthly breakout, which would be exactly what the bulls want to see. Now, I've been talking about this backtest line here. We can see where it is stalling for this month. Another observation is we should be down substantially this month for the cryptos because the RSI is dropping below 50, but we are not. And that kind of tells me that this downside scenario is not very strong. So it wouldn't surprise me that in the weeks ahead, what ends up happening is we recapture the level above 50 on the monthly, and we see a monthly breakout above the recent monthly closing high from 2023. On the weekly for BTC, if we consider that there was a recent breakout and this breakout has not been challenged since, we can argue that net, this is a market that is now sideways after a successful breakout. So net, I would give it the benefit of the doubt. And one thing we can do if you're trying to initiate momentum entries, a breakout above the recent 2023 weekly closing high. So depending on your exchange, it should be around 30,300. A breakout above this level-ish, depending on your exchange, where the weekly closing high from 2023, a breakout above this level could ignite another round of momentum to the upside. Another way of looking at it is take a look at this breakout here recently. So it's another way of looking at it. We clear this line right here, which is this breakout in price, and now we are coming to back test it. If we can coil above this line, then it means that in the short term, we're setting the stage for a recovery week to week. And if we end up breaking below the line, then we're in a different market that is looking and seeking lower prices. So support would make sense, would be consistent with the other markets we've looked at in this video, as we are going into the long holiday weekend with the bulls in charge of this market. I am Eric with Mother.com, and I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator, Adonai.